The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing out there? This is Darrell Martin, and I'm here with you on the Diagnostic Trading Hour. And if you have any questions, feel free to go ahead and give me a call, whether it be about futures, forex, stocks, options, Nadex, or diagnostic trading in general. You can reach me directly at 877-927-6648. Again, that's 877-927-6648. Doing a quick wrap right now on the market. We got the S&P just down, 1.5. We got the Russell down 0.80. We got the Dow down 2 points, and we got the NASDAQ basically flat right now. We got natural gas, it's at 0.045 at 1.5% up on the day. And we have oil, which is barely moving from yesterday's close, sitting right now at about 8 cents down on the day right now. So really not a whole lot of movement in oil, one of the flatter days that we've seen there. Over on the metals, we got silver down 0.131 right now, and we got copper, which is actually down up 1.6. So copper is really moving. We got gold; it is barely doing anything. It's just down 20 cents right now on the day. And looking over at pound dollar, we got looking at the currencies here. We got the pound dollar up 36 pips. We got the euro dollar up 40 pips. And we got the Aussie dollar down 25 pips. The U.S. Canadian up 46 pips on the day so far. Looking over at a couple other things on the ags, we got corn, which has been definitely a very volatile instrument lately, but it has slowed down in recent days, and it is at 11.25 up on the day. And we got soybeans, which is up 22 points on the day. And that basically does our market wrap for you right there. And so what we're going to go ahead and do is go in and look at a few more things for you. Right now, looking at the S&P, looks like it had a great gap fill play. If I caught that, basically opened down, looking to buy above previous bars high there, you could have got in. Very easy play. Could have got in right at 14.01 and got right on up here about 14.06. Would have been a take profit point for you if you're doing a gap fill. And you could have done that on a lot of the indices today. So we go over and look at the NASDAQ. And we had the same thing. Could have got in right here at 27.66. Could have got out at 27.76. Quick, easy 10 points for you. And if we go over and look at the Dow, on the Dow, looking at it right there, we got it, let's see, closing right there at 13.50. And then could have got in right here at 13.24. So 25 points on the Dow. And looking over at the Russell. On the Russell, had a big gap down the previous day there. And today had a smaller gap down, but still had a played nevertheless. Could have got in right here at 8.20. Could have got out of the trade right around 8.23. So an easy, quick 3 points for you. So always check for those gap fill plays. They do work a lot, and day by day you can go back and you can look at them. And depending on what platform you're using, you can choose the time frame you want to view to be able to see that gap play really easy. And right over here, I want to say it's on the Style tab. If you're using, let's say, Thinkorswim, and you can go over here and you can look at the chart details, and you can set up the chart to basically, set it up however you want to. But one of the things you can do is you can go in, let's see here, on futures, and you can say, you can uncheck the show extended session. So if I check it and I hit apply, then it's going to show me the overnight movement. I won't really see the gap as easily, but I can uncheck it if I want to, just to see that gap play. And once I see the gap play, I can mark the lines on my chart and hit OK right there, and then go over, and then I can see where it gapped down from the close to the open. And then, of course, you want the trade to start going in your direction before you look at trading it. And you want that entry to happen, ideally as early as possible, ideally before 9 o'clock if possible. And it's like this trade would happen right on the 8:55 to 9 o'clock on the Russell. If we look over at ES, we can look at the same thing. Because sometimes when that thing gaps, it just gaps and then it goes. And same thing, we would have had a 850 to 855 entry on ES. And looking over at the Dow, on the Dow, let's see, what time would our entry have been? On our entry on the Dow would have been right here at 850 to 855. So you would have got the entry on the Dow there, and then looking over at the Russell. On the Russell, you can check it out, or no, we didn't do the Russell already. Let's check out the S&P. On the S&P, the entry on that one, back up a little bit, and we'll check it out. You would have got in at 850 to 855. So really good timed entries. And if we go back, I mean, you can even look at the previous day right there. You know, that one went on down, and would have not worked as well for you. It had a big gap, and it did actually fill it by the day's end. And so what do you do? How do you trade a gap play like this? And I mean, it just literally, like, right there, just nicked it. You know, how do you trade this kind of play if you're wanting to, you know, go in and you don't want to get, you know, hammered on the play because you have a day where it drops on you? And, you know, even days, now right here, of course, this would have been a little bit different day because you're looking at a gap from, you know, a holiday. So you really want to look, the gap plays are best going to be looked at when you're looking at, you know, your normal trading days and trying to find those days that are going to work best for you. But how do you trade a gap play, and how do you trade it in a way that it's, you know, beneficial for you? Well, there's a couple things that I found that seem to work pretty well. I have a couple very simple rules on my gap play trades. One is, if I'm looking at the S&P, for instance, I don't do the play if it's greater than 10 points. Okay, so if there's more than a 10-point gap, a lot of times you just see the market go in the other direction. Doesn't work out for you. And let's say it's less than 10 points. Let's say it's, you know, obviously anything less than 10 points. Then I want it to be usually I'd like it to be 3 points, if possible, for me to take my trade, because I want some room to actually make a little bit of profit on the trade. And so on this day right here, let's see how that would have worked out. 1405, you know, pretty small gap. But again, I want the 3 points when I'm looking at that one, my entry, okay, to be at least 3 points. So we got 1401, 1406. So you may say 1402 even. So I mean, you'd have basically right at your 3 points right there. Where you could have got in a little bit more than 3 points of profitability. So I'd like to make at least 3 points on the trade, and ideally have a better risk-reward scenario if I'm doing just outright futures. You can do the same thing on spiders, you know, as well. Now, with Nadex, there's an even better way that you can go in and you can trade it. You know, you got to pick your trades, and you got to, you know, do them well and do them wise. But you know, what can you do on Nadex? Well, on Nadex, you don't ever get stopped out, so you actually have until the end of the day to be right on the trade. And there's different ways to make this trade. You could go in and you could place a trade on the binaries. So let's look at a binary trade on Nadex and how that would actually come out for you if you wanted to play, like I said, a Nadex trade on the gap fill play. And just, you know, something new, something a little bit different to talk about today. And so let me log in over here to my Nadex account. And if you don't have a Nadex account yet, then you definitely should sign up for one. You can get a free demo at no cost. You can get a live account. It's only $100 to fund the account. And to get that, all you need to do is go over here right on TFNN.com, click on the Nadex banner, and click on Create Account. And to open a live account, click Start, put $100 in, and you have a live functioning account, okay, with all the bells and whistles, live data feeds, platform, everything. No extra cost for any of that. The only fees there are exchange fees, and even those are now capped, which is a great benefit. One of our callers called in this week about that. We're now, basically, it's 90 cents per contract. If the contract expires out of the money, meaning that total loss, then actually you don't pay anything on it, okay? And another benefit is if you do more than 10 contracts, it caps at $9. So if you do 20, 30, 40, 50, 80, 100 contracts, it's still capped at $9 on the fees. So a really, really nice benefit on trading. Also, you can go over here, you can do the test drive on the demo account. So if you go over here and open a demo account, then all you got to do is fill in your username, first name, last name, phone number, and email address. Click Apply for Demo, and you'll have an account in less than 15 seconds. They'll send you an email with a password in it. If there's an O in that, remember that's a 0, okay? And then click on Login to log into your Nadex account. And once you've logged into your Nadex account, then let me show you what you're going to see. So you'll log in, and the first thing you'll see is some notices. And you want to make sure you take advantage of these notices. Look at them right here. What they say right here, they have the information about the $9 cap on fees now. And they go into, hey, the market's obviously closed for Labor Day. And they talk about when symbols are going to be rolling over. So like, you know, silver, copper, corn, soybeans, they're rolling over the contract that the spreads and binaries on Nadex, the underlying futures market for silver, copper, corn, and soybeans, what month they're tracking. And they let you know that effective on Monday, September 3rd, that their soybean contract would be on November 2012 futures. Okay, so you need to be following the November futures. And the silver, copper, and coin contracts would be looking at the December futures. And so that makes it pretty easy for you just to know the information on there on which one that you're following. So now that you got that down, you can now, if you don't want to see it again, you can click save and don't show again. Or to click save and continue. You can come back to it later, but you definitely want to read that and see how that works, okay? So those are important notices, and they do impact you. Another important button on here is refresh to make sure you're always seeing the most current spreads. Before you're about to do a trade, hit the refresh button and make sure you're looking at everything that is currently available. So if we're looking at the market this morning, we can see that we could have got an entry somewhere around 1401, expecting a rise to about 1405. So how would that have worked out? Well, now we can go to the indices, bull spreads. We can go to US 500, or we can go to indices binaries and go to US 500. So let's just say we go to the binaries to begin with. And I usually look at the dailies and the binaries. I don't mess a whole lot with the 3-hour binaries. I mean, the 2-hour binaries a lot of times, just because there's not as many options on there for you to choose from. And I really like the dailies. So, but you may find just a really, really good trade right here. So if you do, then by all means take advantage of it, because it's only going to be 4 points away. And we had about 4 points on the trade. And so as you can see, let's say you were looking at this one for the 8 to 10. Now, remember, you're going to be limited in how long it takes to get back. And let's see, how long did it take to actually get back? If the trade started at 8, it went to 10 Eastern, 9 Central. So you wouldn't have quite had enough time for it to get all the way back where you wanted to get back to. So you just want to make sure you have enough time. Look at the expiration. The expiration times are always going to be listed in Eastern time. If, you know, and really I expect a gap trade to be over by 10 or 11 o'clock at the latest. And, you know, so maybe 11, 12 at the latest. Of course, Central time, that'd be the very, very latest. Hopefully, it'll be over sooner than that. So, well, let's just say you're looking at the binaries, okay? And you know, you only got 4 points away. And when the market was in right there, you're looking at the market getting up to about 1406, you know, give or take, right? So 1406, we got a 1407, we got a 1404. So we'll check out the 1407 on here. And the market is actually trading right now at about 1405. So it'd be worth about $45 if it got up to 1407. And so let's see, you know, what price was it trading at around, oh, click on that again. Every once in a while, it doesn't pull up as like I want to. I'm sharing so many things at once on the computer here. And there we go. All right. So just close it and reopen it. Boom, there we go. All right, so we got 1407 that we're looking at, and it actually spiked up a little higher, but that is, of course, we went higher than the market. So now let's check out this binary trade. Now, the way binaries work is they're always 1 to 100, okay, $0 to $100. And what that means is they're worth $100 max. So if you're risking 25 bucks, you can make 75. If you're risking 50, you can make 50. If you're risking 10, you can make 90. If you're risking 90, you can make 10. So the combination of your risk and your reward on the trade is actually the maximum amount that a binary is worth. They'll always equal 100. So go ahead and stay right there, folks, and we'll come back. We'll check out how you could have played this gap fill trade this morning right after this commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just sort of doing a wrap-up looking at how the market's different ways that you could trade what's called the gap fill play. And there's a reason why the gap fill play has a high majority win rate, and that's because there are orders sitting in the market that have not yet been filled due to the overnight gap. And people, had limit orders in there at a certain price or better. Market gapped down, their orders didn't get filled. The market exists for one reason and one reason alone. Exchanges exist for one reason and one reason alone. And it's not to fulfill any other requirement than one thing, and that is to fill orders. Okay? So the market exists to fill orders. Therefore, when that gap happens, the market has a lot of orders it hasn't filled, and it loves to go fill those orders. Now, where it goes from there, who knows? All right? So that's where you're going to go into your style. You're going to go into your fundamental, your seasonal, your statistical, and your technical analysis to do your trades. But the gap fill play is a high probability trade. You just need a good risk-reward measurement in place to take advantage of that. I mean, you're talking 70, 80, 90% probability depending upon what market you're looking at for that trade. So now, again, it's not just how many you win and how many you lose, but it's also how much you make when you win and how much you lose when you lose. So we want to look at the four major indexes when there's a gap, and you can be looking at this about 5 minutes before or so to start seeing what you think may be a really good gap, and start looking at the turnaround on them, and they ought to be happening at about the same time to find out what the best possible profit for you is on the trade. And your goal really is to ideally get out around $50 on the trade. And so what we're going to do is we're going to actually walk through the four major indexes here and on the binaries, and we're going to look at doing a gap fill trade. So very, very simple. Very easy to do, and we'll also probably do a wrap-up on the spreads on how to do that as well. So, a lot of different ways to take advantage of this trade, and, I just want to show you a couple of them here. So that way you know what you can be looking out for. This is a trade you can do almost every single day. So now the big thing is whether or not it's a good trade to do. Like I said, you definitely want to have some room for some profitability in there, and you want to see what strikes give you that room to go in and build, make some money on the trade. So now let's go ahead and check that out. So we're going to compare several different trades together. And what we're going to do is we're going to look at, okay, what would the entry time be? So we'll be looking at, getting in right here around 8:45, 8:50, and with the profit goal about 27.76. And so on Nadex, what I'm doing is I'm pulling up the binaries and the indices, and I'm opening up each one of the indices, and we're going to pull up each one of them over here. And I'm actually looking for, what exists. And I can actually see there's on the NASDAQ, there's a 27.76 strike. So one of the cool things on Nadex, they give you free charts here of their products. This isn't a chart of the underlying, it's a chart of the derivative. But I can actually click on this, and it'll actually open the chart of the binary for me, and that's really helpful, especially when you're new. Trading on Nadex to see, what would that have looked like if you would have placed that trade. And you can sort of look historically. It's a great way for you to get a lot of knowledge fast because you're trying to figure out, how do these things move. And so when we get in there, we're looking at this. Like I said, we got an entry right around 8:45, probably a little lower, closer to the end there, 8:50. But 8:45, 8:50 would have been our entry and the time. And that now I'm talking Central. So let's go ahead and convert that over to Eastern time. So 9:45 Eastern time. And we got a profit goal 27.76, where we're looking to take it off for about $50 on the trade. So if I go in and go, okay, well at 8:55 or 8:45 or 9:45 Eastern time, which the Nadex chart's going to be in Eastern time. Okay, so we're going to go over here. We're going to move it on over. We got 9:45 to 9:50 Eastern time. So we'll go ahead and we'll look at what was the closing price on that. It was $30 on the trade. So I can go in on this trade, I can risk $30, and I'm looking to get out at around $50. Now, that's not a great risk-reward ratio, but it's a high probability. And sometimes your reward-risk ratio, obviously you always want it to be good. At the same time, the higher the probability of your trade, the worse risk-reward ratio you'll accept. And that's the whole concept behind like iron albatrosses, also known as iron condors, but they're usually incorrectly labeled as iron condors. They're really iron albatrosses, where they're really, really wide apart. A true iron condor has equal strikes between the sold strikes and the bought strikes all the way across. So an iron albatross is where they have equal verticals, meaning like, say, 10 points on each side, but there may be 50 points between the two sold strikes. And it's a really high probability trade, wins 9 out of 10 times, but the risk is a little bit higher, actually quite a bit higher depending upon how you do the trade. So on this trade, we're looking here, we're getting in about $30 on the trade. You may have got in, a little better, a little worse. But I'm just assuming, right here that we got in right on the close at $30. We got as low as 20, got as high as 32. So we got in there, and we're looking to sell out at about $50. And looks like right here, we just started hitting 50 right there at 10:05, and then we hit it again at a little bit later at 10:10 there. So 10:05, and then definitely in this range, you would have been able to take that off. So that's risking 30 to make 20 on that trade, on a high probability trade day after day after day. So that's the NASDAQ. We're going to come back. We're going to review the S&P 500. We're going to review the Russell 2000. And we're going to review the Dow and see which one actually gives us the best trade for the day.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back out here to the Diagnostic Trading Hour, and we're going over basically the gap fill trade and just looking at the different markets to see if there's any kind of major difference between any of the possible trading setups that you could take advantage of. And so what I did is I went ahead and pulled up all of them so we can look at them together. And the way that we're going to look at it is we're going to look at what would happen if you got in at around $9.50, okay? And if you got out, basically when the spread hit about $50, if the spread hit $50. And so, we're looking at all those trades, and that's basically, on the spread hitting $50, that's only if we got the strike that we wanted. So right here on the NASDAQ, we had a spread that was at 27.76, and we not the spread, so the binary. And so we got a binary at 27.76 right there. Okay, over here on the S&P, we can see that the market had a little bit of a gap right there, gapped 14.06. So 14.07 is the closest strike we could find if we were looking at the dailies on that. And let's see, we got the... pull this right back up on top. There we go. And then we'll go over here and we'll look at the Wall Street 30, the Dow Jones, and check that out. Okay, and we got 1360, and the market closed right there at 1350. So we had a 1340 or 1360 option. So we went ahead and went with a 1360 option. So we got that one right there, and then we're going to go over here and we're going to look at on the Russell what was the gap target, and it was 823. So we're looking at basically 823 on the close on yesterday. So pull that one up, and then what I'll do is I'll pull these back up right on top so we can see each one of them and look at each one of the binaries. Remember, they're all going to be valued as 0 to 100, and that means our maximum risk is what we put up. Our maximum profit is the difference between what we put up and $100. So on this trade, we're looking at getting in somewhere around $30, and we could have got out at $50. So basically a $30 risk, $50 reward. Now, we could have held on to it longer, but our expectation is that it basically gets back to the strike, within a point or so on the up or down side, and we're looking to sell it out at $50. So this trade would have been profitable. If we look over here at the S&P, we could have got in at the same about $30, and we could have got out at $50. If we go over to the Wall Street 30, we could have got in at about $30. So, give or take a buck or two there. So maybe a little lower, maybe a little more. But about $30, and definitely could have got out at 50 numerous times there. And over here on the Russell, we find that we could have got in right here at, about $30. Russell actually didn't make as big of a climb towards it, but we had a lower actual expectation. So we got 823 there. We got an 827 strike. So we weren't really able to find the strike that we really wanted, and we had to get a much higher strike. So I'm going to go over here and see if we can find one better strike that maybe is just a little bit better. And we got an 826 and an 828, and what we really want is an 823. So let's see, here's an 822, 824. Okay, so we're going to go for the 824 trade and see what we're actually able to pull out there, and I think we'll be able to find one that will work out for us. There we go. So I've got an 824, basically went on the high side there so we can get a little lower risk on the entry on the trade. I'm going to zoom in on the chart, make it a little easier for you to see there. And we got in right around here, around 950 on the trade. Got in for about $30 and got out for 50. So you can actually see that all of them actually came out as a profitable gap fill trade in this instance. And it really didn't matter which one you chose. They all basically were working together in tandem. And some of them had a little bit more of a rise, but at the end we were really going for get out at $50. Why $50? Well, when the market is at the same price as the binary strike is going to be worth right around $50. So, depending on the bid-ask spread, I'd say somewhere in between 45 and 55 at the worst, but really around $50 is your profit goal. So where you'd like to be able to sell out of the trade at. And so you're going in and you put your trade in. Once you put your trade on, so just to show you an example, if I have a trade on, and let's say, I'll put a really low probability trade on here, but I'll throw this one on here just so you can see an example. This is a demo. And hitting that, place order. Once I have an open position in, I can now go in and click on that green button right there. And I can say, I want to sell it, but I want to sell it at $50. And then hit place order. And now that's going to actually be showing in my working orders down here. And the advantage of that is if it even hits it for a second or two, I can potentially get filled. So I'm not trying to go in and catch it right at the right second. I literally have it in there. And let's say I want to change it. Let's say, it's taking a long time. I'll be happy if I get 45. You could do that just by clicking on the green arrow and you hit amend order. And now it's at $45. Okay? Or, if you want to go back and change it, click it again and just change it to, no, I really do want $50. So, not recommending you go through and, changing them all the time, but I just want to let you know how you can place a closing working order, a limit order, an advanced limit working order for yourself, just by using the green button on the open positions. And then, of course, make sure that you are editing. If you want to edit that working order, edit it in the working order field. Don't open another one or you'll get two contracts you're trying to sell out at 50. Okay? So that's one way to play the gap fill trade. And I went through and I pulled the stats up just for August, just to sort of see, how did this trade work out on here. And, as far as, did the gap fill on the trade. And we can see it actually did pretty well going in. And these are basically all the opening prices and the closing prices of the previous days. And one of my big rules is on the S&P, if it's more than 10 points, go with the gap. So if the market gaps more than 10 points, then, let's say it gaps down, then I want to go short. If it goes up more than 10 points, I usually want to go long. And, to make this easy, I basically said at some price during the day, because we're choosing 4:15 expiration, okay? At some time during the day, did it at least, hit on the high there, if I was doing a gap up, did it at least hit that price, or on the low, if I have a short gap, did it at least hit that price on the low side, because then I know I can get out at, 50, all right? And so if I look at the gap up, gap down plays on these trades, on these days right here, then I can actually see how often it actually did win. So it's pretty cool. You can go in and let's see. There was 9 gap down buy trades. So we bought because the market gap down, went back up, and 9 of them won. Or there was 11 trades. 9 won, 2 lost. And then on the gap up sells, where the market gapped up and we sold, 9 of them won, only 1 of them lost. And of course, past performance is not indicative of future performance. Okay, so I'm not making a recommendation here. I'm just showing you these are stats of, if you were basically playing the gap trade, would they have been a win or a loss as far as just the gap goes? And 82% winning on the gap down buy and 90% winning on the gap up sell. And then looking over here at the 10 plus gap down and 10 plus, remember I said if it's 10 points, I go with the gap. So market gap down, then I'm going to sell. And there was one of those that happened in the last month, traded with it, won. One of those that happened in the last month, a gap up and bought, went with it, and it won. So gap plays are a lot of fun, and Nadex is a great way for you to hop in and trade these trades in a way where you can have limited risk on your trade, so you don't have to worry about the market spiking against you, because that could be the scariest part on a gap trade, is you're going in and trying to play that gap trade, and it doesn't go with you at all. And so, it just keeps going. Where do you set that stop loss? And, when do you get in? And so, if you are doing it, your stop loss usually wants to be the low, and usually I'm looking for a fade of the reversal. So let me show what I mean by a fade of the reversal, just in case you are trading this on the spiders, or you are trading it on the futures, or, the IWM, or, the diamonds, whatever. But is what I like to do is I'll go in. I want to wait until it breaks. I want to let 5 minutes go by, okay? And then I'm going to wait for it to break the previous bar's high. So that really is my entry signal, you could say. And so when it breaks the previous bar's high, then I know I have an entry, because the market has stopped going in one direction, okay? And now it's, in my opinion, what's going to happen is the market is now reversing to go fill that gap play. And I'd really like that to happen in the first 30 minutes of trading. If it doesn't happen in the first 30 minutes, I probably don't expect it to happen. And I look at usually 5-minute bars on this. I'm not looking at 1 minute because that's just too short. I usually want 5-minute bars. I mean, you can look at 1 minute, 10 minute. You could use Renko bars. I mean, there's a lot of different kinds of bars you could use. I'm looking at 5-minute bars on this specific type of trade, and for a reversal of the previous bar's high or low. So on a gap buy, when it breaks the previous bar's high, like here, then that's going to be my buy. Where's my stop loss going to be? Well, it's going to be a tick or probably 2 ticks below the low since the move down. And so right here, I would have had an entry, like a tick above. So you're looking at an entry of 1402 with a stop loss of 1399.5 and a take profit goal of, let's see here, 1406. So a good risk reward scenario, a high probability trade setup, get in, get out, be done. All right. And same thing over here, would have got an entry at this point. And so the high on this one was, entry would have been, and this is on the Russell 2000, I would have had an entry of 820.3 with a stop loss of 818.1. Okay. So, and then I would have had a take profit goal of 823. So again, a great risk reward scenario, high probability trade setup, looked really well there. And then let's go here and look at the Dow. On the Dow, I would have had an entry of, let's see, 1 tick above the high, so 13,023 with a stop loss of 13,005 and a take profit right here of a close on 13,050. And then now let's check out on the NASDAQ what that would have looked like, and that'll wrap up the gap fill trades here. Is I would have had an entry of 2766.6 with a stop loss of 2759.25 and a take profit goal of 2776. So all scenarios having a good risk reward scenario, having a high probability trade setup, looking at just the gap fills over the last month. That doesn't mean, of course, I'm going to win. There are going to be losers, as in any kind of trade. And make sure you do manage your risk. But one of my favorite ways to manage risk is with Nadex. And the way that we looked at in this example is how to do it with binaries. You could also do it with spreads. So spreads are a great way. You just got to make sure there's enough room there. If you're going to use the spreads for the gap fill plays, you really want there to be some distance. So like 5, 6, 7, 8, 9, 10 points of distance on that gap fill. Just so that way you can get the low risk spread and give it room for that whole break-even distance it has to cover, but with some good profitability available for you. So let's go ahead and we'll check out a couple of those examples and just let you see what is available. But this is it's a really fun trade. If you haven't traded the gap trade, it's very, very, very simple. Okay? All right, so let's go ahead and I'm going to pull up the Nadex again, and we're going to look over here, and I'm going to close out. By the way, if you have, let's say you have a bunch of windows open and you don't want to go through and close each one of them, just hit refresh, closes each one of them for you. Makes it really easy. Okay, so we're looking at the indices, and now we can look at the spreads on the indices. And we can see if there's a spread that we really like on the indices. So let's say we're looking at the US 500. And on the US 500, basically, it got a signal to go long around 1402 with a take profit at 1406. So that's a pretty tight trade, a 4-point trade right there. And so I'm going to see if there is anything there that does line up that would work really well. And I'm looking at these. Let's see, 1402, let's see, 1400. That'd probably be a pretty decent trade at that point. Let's see here. We're going to look at the 400s also. And they ought to be priced the exact same because they both have the same floors. Look at that, 1400, 1400. So if you have a choice between the 300 and the 400 point wide spread on the US 500, and they both have the exact same floor, which means they both have the exact same risk, and they both expire at the exact same time, do you want the one that has more profit potential or less profit potential? Pretty simple, right? You want the one with more profit potential. So if it's the same risk and same expiration, then you want the wider spread. So we go in here and we look at the 1400 to 1440, and let's open it on up and see how that trade possibly could have worked out for us this morning. You know, what would the risk and what would the reward have been on this trade? So we're getting in again around 9.50 here. So we're getting in at now. Remember, you got a little bit of premium built in. So around 1404.5. Okay, and then right when it gets up here, then we're looking at around an exit of around 14. We'll just take the, let's see, the high when it came right back to it was 1408, but it actually went a little higher. So we're not going to take the high on that. We're going to take right here around 1408, and we were going for a profit goal. So I always get to line those up. You know, what price were you looking to get out at? 1406. When did it actually first hit that? It hit that at 910 or 1010. So we can go in and see, you know, what price was it at 1010. It was around, 1407. So if we got in at 1404 and we got out at 1407, then, that's basically 3 points on 4 points of risk. So $40 risk, $30 reward versus a $40 risk and about or $30 risk, $20 reward. So they came out about the same in this instance, being so close to choose the spread over the binary. What I can definitely tell you is I've done some, one side by side, like last Friday when we had that massive gap fill trade, and the spread definitely won hands down. So if it's wider, the wider that gap is, the better the spread is for your trade. And so a lot of times you're going to want to probably choose the spread. I like to compare them side by side. So, pick your index and then check out the spread and the binary and see which one works best for you. So we can also go over and we'll check out, let's see, what's some of the ones. Let's see, the Dow had a pretty big gap there, 1305.1, and we got an entry here at 13.023. So we have like 25 points on that. Let's go over and we'll check out the Dow. And again, we're going to look at the strikes to see if they're at the same. They are at the same, so we're going to choose the wider one. And we're going to go in and we're going to look at what would happen if we bought this one. And again, we want to make sure we get the lowest risk trade that we can. So 1320, we're looking at about $20 intrinsic and probably about $40 extrinsic risk. So I'll wrap up the Dow when we get back from this last segment here. Stay right there for the commercial break, and we'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks. We were looking at a wrap-up, checking out the Dow, and had basically the exact same risk-reward scenario as the S&P if we were looking at the spread. We could have got in on the trade right here around $40 risk and basically taken about a $30 profit on that trade. So really the binaries today, when the gap was not as big, the binaries overall really, in my opinion, they won. So they had the better risk reward. And the trade, again, one of my favorite trades, one of the easiest trades to do. And last thing I'm going to do is look through some deviation levels and even talk about how that combines with this right here and go into tomorrow. And we got a lot of stuff coming up tomorrow. So the deviation levels, looking at this, it looks like every one of them bounced right off of their half a deviation level. Why are they only moving half deviation levels today? The reason is because we have so much news coming up tomorrow. So if we look right here, like at the S&P, I mean, we had it right around 1398.5, and I mean, it went right down, to 13.99. Let's see here, the low on this, 1399.75, within a point. And over here on the NASDAQ, we were looking at around 27.59, and we came right down to 27.59. And then looking over here at the Dow, we came down to, looks like 12.964, and the low on this came on down to 13,006. So it didn't even quite reach a half deviation level yet. And so if the markets are going to move down, they're probably going to move down at least to those levels. They may decide to break. We'll see if they do break. I see them being a little more consolidated today, just for the fact that we have all this news coming out tomorrow, unless people are scared and they start dumping everything. And so that's definitely a possibility. So let's do a quick wrap on what's coming up tomorrow, because tomorrow is just a huge day in trading. And I highly recommend that you open a Nadex account today and at least open a demo account and trade it for tomorrow, because tomorrow is going to be a whirlwind of a day. Okay, it's going to be one of the best trading days available to you in a long time, basically all summer here, right? So all the traders are back and they're ready and they're roaring to go. So let's go ahead and check this out. We got the revised GDP of the euro is coming out at 4 a.m. Then we have the French 10-year bond auction coming out sometime tomorrow morning. We're also going to have German factory orders. Then we're going to go into asset purchases for the pound. And then, of course, the Britain is going to, at 6 a.m., this is Central, or 7 a.m. Eastern, they're going to release their bank rate, their rate statement, okay? Then we're going to go over and we're going to have the Challenger job cut. It's not really a big announcement here at 6:30, 7:30 Central, or 7:30 Eastern here in the U.S. We're going to have the minimum bid rate. Okay, so basically the EU's rate is going to come out at 6:45 or 7:45 Eastern time tomorrow morning. Then we're going to have the ADP non-farm employment change. All right, so now that's going to come out. That's obviously a huge number. Everybody's watching employment like crazy, looking at what is the Fed going to do next week. And, of course, that's going to happen on Friday as well with the other number that we have coming out. And then you have the ECB press conference at 7:30 Central, 8:30 Eastern. Then you have unemployment claims at the exact same time, 7:30 Central, 8:30 Eastern. At 9 o'clock Central, 10 o'clock Eastern, you have the ISM non-manufacturing PMI coming out. And then Draghi is going to come on after the ECB press conference, and he's going to talk again, probably trying to calm things down, at 11:30 Central, 12:30 Eastern. So, at night or during the morning, but basically everything's really going to start picking up in the morning around 4 o'clock is when things are going to start going, maybe 5 o'clock. So you may want to be getting up early, checking things out. But the spreads start trading early. They come on early. They start at 7 a.m. Central, 8 o'clock Eastern. You start getting one every hour, spreads and binaries. Check out the straddle trades. We've talked about that. That's definitely probably one of your better ways to go, because you have no idea which direction this is going. Set your take profit orders. But it's going to be a fun day tomorrow in the world of trading. So just make sure you use limited risk, maximize your leverage, and use things like implied deviations to be one step ahead of the markets. So this is Darrell Martin with the Diagnostic Trading Hour, and thank you for listening in. I look forward to seeing you tomorrow at 1 o'clock Eastern, 12 o'clock Central.